What's going on, guys? Mr. Zink here. In today's video, we're going to break down gaps. One of these gaps on the screen right now has a sub 60% win rate. The other has a 94% win rate. Quite obviously, the one that is highlighted in green is the one that you should be using, although not many people know how to identify it nor know how to use it. The red rectangle, the red gap, is the one that has a sub 60% win rate. This is the gap that most traders highlight because it is easy to identify. It is the 8 p.m. close to 4 a.m. open gap. Most traders think this is the draw for the day every single day. However, this gap doesn't always fill. When it does pop up, sometimes it fills, sometimes it doesn't. The reason that we're looking at this green gap and the reason that you need to incorporate it into your trading strategy is because it has such a high percent win rate, albeit it doesn't really pop up that often. When it does pop up, you should be sitting on the edge of your seat waiting for this to play out. Now, I call this the previous day in London gap. I don't entirely like the name, so in the comments, drop what you think we should call it. The most liked comment, that's the name that we'll pin on the strategy. To get this gap, mark out your previous day's 50, previous day's high, previous day's low, drag it out to the right, and your London 50. London low, London high, drag it out to the right. The gap present between the previous day's high and London low, or let's say it was a gap that was down here, the gap between previous day's low and London high, that is your previous day and London gap. Now that we mark that out, that has a 94% chance of filling or being the draw for the day. If you see price over this gap, you should be anticipating a pullback right into that zone until that whole gap is filled, meaning that you fill down to previous day's high. If it's below it, you're looking for price to continue up to fill up to previous day's low. This happened twice this week. It doesn't happen all that often. It usually happens once, maybe 2 times a week if you're lucky. The longest stretch that I went without seeing one of these gaps was about 10 days, so 2 full weeks. Going to yesterday, just to review how this happens real time. There's our previous day's 50. Price opened 4 a.m. session, significantly above previous day's high. So we had a pretty monster gap to start the session. That was our gap right there. If you woke up at 4 a.m. to trade, like a psychopath, that is your draw. That's what you should be anticipating. So you should be hammering shorts, not saying that you enter shorts without a model, but you should be highly anticipating price to continue down to fill this gap at previous day's high. Now, London session developed, and the gaps started getting smaller and smaller and smaller. We go to the next candle, and it slowly started filling down, and there you go, right before open yesterday. The 9:15 candle filled that. So then we mark out our London range, and we no longer have the gap present. So we have no draw on the day. We have a bullish bias for the day as we're over previous day's 50. And we're looking for a push up to either London 50 from previous day's high and London low. And I already know what happened because we traded it yesterday. There's our push up to London 50. Full PT met on that trade. Close the charts for the day right there. As you can see, this gap does not pop up very often. When it does, it has that 94% win rate. This gap is the one that many traders mark out because it's easy to identify. It's easy for you to see, hey, this is a massive gap between previous day's high or London low. No, that's not the case. This is a gap between the 8 p.m. close and the 4 a.m. open. In this case, this is a Friday into Monday gap. So these ones are the new week opening gaps. These typically fill at a higher percent chance than the 60%, sub 60% of the typical 8 p.m. to 4 a.m. open. In this case, this one filled. Congratulations, you were looking in the wrong spot and got a correct result. What typically happens is this right here. You have a gap between 8 p.m. and 4 a.m. open. This is a Wednesday into Thursday. The gap fills maybe 40% of it, and then price rockets to the upside for the rest of the day. If you were sitting here anticipating price to fill this gap because it's an easy one to identify, you're hearing it from other influencers, whatever it might be, change up what you're looking at and look for the gap between previous day's high and London low. Marking out previous day's high, I'm not going to mark out the whole thing, and then marking out London low, which is hit 3 times in a row right here. Do you see a gap between those levels? No. So you have no draw for the day. In this case, we had a move over previous day's 50. So here's our previous day's range. Drag it out to the right. We have a bullish bias for the day. Here's our London 50. Price bounced right at the London 50 right at open. Given our bullish bias, we have no draw because there's no gap between London low and that previous day's high. Looks like I drew a little incorrect there. There we go. Price just rocketed it off previous day's high, London 50, continued up for the entire day. What you want to do with this strategy is you want to back test it on your own. You want to make sure that you're identifying where it's located, what happens when price hits it, how long does it take, all that stuff. In this case, we had a gap between previous day's high and London low. Did it fill right at open? No, but we still had a bearish bias for the day. Even though we were over previous day's 50, we had a bearish bias because of the significance of this previous day and London gap. Drag it out right there. And if you can tell, this one filled all the way at the last candle, the 3:45 15-minute candle. The very last candle of the day filled that strategy, filled that gap, sorry. So it might not fill right at open, might not fill at 1 o'clock, might not fill at 10 a.m. in the morning. This one filled all the way at 3:45 in the afternoon, 4 o'clock close even. This is still a win on this gap because it helped you avoid going into longs for the day. You have a bearish bias waiting for that draw to fill, and then you move on into the next day. Or you could have stayed in shorts right at open. You might have had a little drawdown on them. You might have had a stop loss at London high. But the fill on this move lines up with the 94% that we anticipate on the strategy. Again, zooming out, how many green rectangles do you see on the screen? Let me actually redraw this one in over here. Exit replay mode, yes. So there are a whopping 2 green rectangles. Just picture this one still over there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trading days. So 1 every 5 trading days, 1 every 5.5, once a week, sometimes twice a week if you're lucky. You have this model pop up. You have your previous day in London gap. You should be sitting on the edge of your seat waiting for that to fill. Again, marking it out from today. Let me clean up the chart here real quick. Previous day's high, London drawn out. That gap filled right at about 10:30 this morning, 10:15, 10:30. I took a long off the initial fill, which was on a wick. Bounced up, hit London 50. Let me go down to a much smaller time frame so you can see what I'm talking about here. Get out of there. So the initial fill was right here, and then it went all the way back up to London 50. And then it filled again, and it went all the way back up to London 50. So 2 scenarios where we had a 50-point move off of this gap fill. After the third reaction, this is no longer a valid level. Obviously, I'm on the 15-second time frame, so you're not going to be able to see the wicks there. It's present on the 15-minute. But after you tap a level for the third time, you can see real on the 15-minute real time, it slowly stops losing its validation, and then once it breaks, it flips. You have 3 taps to the other side. In this case, it only took 1, and then it just free fell all the way basically to previous day's low. These are the gaps that you should be playing, not the gaps between 8 p.m. close and 4 a.m. open. I hope this video helped out. Again, if you haven't seen the London 50 strategy, make sure to click on my channel, go check that out. In the comments, drop the name for this gap, what you think we should call it. I don't really like the previous day in London gap. Most liked comment, that's the name that we'll pin on this strategy. Have a great rest of your day. I'll see you guys later this week for another video.